I think you're right. If we look at what happened in other sectors, this was very rational behaviour. It was a concern around earnings, around one of the big leaders, and that particular sector, a concern around things like energy and what that takes to supply the AI revolution. So these things got hit. Financials did pretty well. Parts of software did pretty well. Broadly speaking, the market digested this very well. The reason I think that we had that headline move is because we're operating in a world where we've got very little margin for error on valuations. When you're under those circumstances, you have to pay more attention to earnings. So to go back to your opening question, has the past few days taught us anything? It's redoubled our focus on where we think earnings are going to come from this year. And so far, the news is good. You've got 3/4 of US companies beating on earnings this year.
Come on, don't fall for that. You know better than anyone I know. You know as well as I do that 3/4, roughly 67 to 75% of companies always beat.
72% is the exact number.
There you go.
So we're a little bit above. But bear in mind, it's important to keep the momentum going. The crucial thing is the scale of the beat, though.
Yes.
We've gone from seeing about 11.4% earnings gain on 2024 to around 12.2 run rating at the moment. That's a meaningful uplift. So you're getting the delivery. You're doing a little bit better than average, but crucially, the scale of the beats is fairly resilient. And that's good, I believe, in terms of the outlook for 2025. Yes.
Oh, we've got breaking news. Stock Europe 600 at a record high. How did that happen? We've been talking about US exceptionalism. Nobody wants European stocks, and now we're at a record high. The story that has emerged, I think, for me, on the back of the DeepSeek story is the story of rotation. But what are we rotating to? Are we rotating to better AI trades away from picks and shovels? Are we rotating to companies, broad-based US companies, European companies that could do well thanks to productivity gains for faster AI adoption? Are we just rotating away from the US markets a bit to Europe because it's been unloved? What do you think of the strategy and the tactics here?
Yeah, well, look, rotation's been something we've been waiting for a while. I mean, but rotation, as you say, to what? And I think that if you take the AI trend, it is towards those being able to make the investments and actually gain from it. I think McKinsey put a report out suggesting it was 25 to 30% of the way through AI adoption. And so that means there's an awful lot to play for. And that's not going to come from your Silicon Valley big tech. That's going to come from your ball bearing manufacturers and your insurance companies deciding we can automate part of our process. Think back to the mainframe era. You had the big winners who developed it early doors, but it was the entire economy that benefited from bringing that into their business processes. That's all to play for, and I think that's why some of the news at the beginning of this week is so seismic, is because it suggests that that cost to enter that investment actually is lower than hitherto thought. And I think that's a good sign for that broadening out.
Yeah, it's a story about businesses no longer writing letters anymore. It's not just putting on a computer and printing it out. It's no longer writing letters anymore because AI is going to be doing it. I want to get to the Mag 7 stocks and what to do, because we've got tech earnings coming. They're just right here, not even on the horizon, right here this week. And what they say. I've been making the point this morning that I think that the numbers could be good because of the AI demand story. So in reality, you might get a pop on the market in reaction. What do you do with these stocks? Because it feels like they can now manipulate their capex if they want to. If they suggest or they get a sense that the market is off on too much capex spending, that they're really negative because of DeepSeek, then they just simply cut back, and that will protect the earnings profile of Mag 7, but not NVIDIA. So what do you do with, say, the Metas, the Microsofts, Amazons of this world versus NVIDIA?
Well, we look at them more as a block. So we look at them more top down. What's it telling us about the economy overall? And I think, we're looking for evidence that there's still capex spending, that you're not seeing a big shift away from some of the major programs that have been put out there. One of the reasons I think the Mag 7 as a block has been so successful is because it's responsible for 40% of the research spending across the S&P 500. It's about 25% of the free cash flow and about 25% of the operating profit. So it doesn't take much of a reset for it suddenly to stop being a growth sector and start being a value sector. So, because of that research and development spend, that's what's really keeping them in the cutting edge. So the first thing we would look for, really to give us a macro signal on the US economy and the tech sector at large, is are they keeping up with that huge capex on research and development?
Just finally, I want to ask you about Europe, because we've got the NVIDIAs of Europe reporting today, ASML for the Dutch market and LVMH for the French market. And we've had very different reactions on both. What do you make of some of these big name stocks that got bundled up into granolas? Are they still looking like mighty names to be holding?
Well, I think Europe's an interesting one, again, in aggregate, because we've got an expectation for 4Q earnings of around down 9% on EPS, which means that you've got a very low hurdle to beat. Europe's actually the surprise winner so far this year, up around 6% compared with the US up around 3 and change. So, can that continue? Well, certainly you could get some decent earnings or some less bad earnings coming through. But if we actually look at where the economy is, we see growth this year being sub-trend, around 0.6%. We've just limped into positive territory on PMIs. So if anything, I think the earnings for the full year of 2025 are still a little bit ambitious. Yes, there'll be winners and losers, and look for evidence of that rotation. But Europe itself, I think, is playing a bit of a catch-up on a very low hurdle rate at the moment, as opposed to being a brand new dawn.